All right, guys, welcome back to the channel. Privileged to be here with hopefully what ends up being strong enough internet here in the fifth wheel. So this is another episode of Fifth Wheel Finance, if you want to call it that. Matthew Pillmore here, president of VIP Financial Education. We teach you how to go further, faster financially. And it's funny because one of the pieces of advice I like to give people that are looking getting into real estate investing is to visit meetup.com and find your local real estate investor associations, the acronym being REIA. Real Estate Investment Associations are found in most towns or cities. They vary in size, shape, member participation, topic matter, quality, and so forth. I think times have changed a bit with COVID and how those meetings are conducted. I see a lot of the meetings that I used to attend in Colorado now being hosted online virtually. And I think in some cases that's even better. But that's a great way to get your feet wet with education surrounding real estate, with networking surrounding real estate, with finding deals in real estate. And I think it's one of the best kept secrets surrounding investing as far as resources and tools are concerned. And they're usually really inexpensive. Again, I'm not sure how COVID has impacted the cost of these groups, but typically speaking, pre-COVID, you'd spend somewhere in the couple $100s per year range to be a member. And you can show up each and every month and get a content-packed meeting with usually a subject of the day. And beyond that, you obviously have your real estate investment seminars that are usually some sort of a funnel or lead into a very expensive sticker price for some form of real estate investment training. And what I find interesting about some of these larger groups, and look, I don't want to bash these groups per se. I think for those that take the information that's provided and put it to work, usually it's pretty good stuff. Most of the people in those rooms spend a lot of money and get nothing out of it because they don't put the work in, much like everything in life. So you've got to be very careful to be committed if you're going to end up coughing over tens of thousands of dollars. And I think what's fascinating is I've picked up on this trend from those real estate investment communities that one of the first places they encourage people to start who don't have money, who don't have great credit, or just have some and not enough to really get involved and make the type of cash flow gains that they're hoping will change their lives, is getting into wholesaling or subject twos. And I thought, this is a subject that's really been missing here on this channel for quite some time. And a recent video that we posted about doubling or tripling the profits of a flip came with my guest for today's episode. And so today we're going to focus all on, wholesaling 101, subject to 101. I'll admit I'm fairly naive when it comes to this. And so this will be a great episode for me to pick up a lot of information on too. I'm going to ask our host here today, our expert on the subject, to really break it down for me as if I'm at the very beginning stages and really just trying to understand it. So welcome back to the channel, Mr. Scott Ulmer. Scott, thanks for coming back on.
Hey, Matthew, thank you for having me. Honored to be here.
So you're obviously widely considered a specialist on especially subject twos, but of course the wholesaling side of things too. How would you define each of those? Let's just go ahead and start there.
Sure. So, and I will just say that the REIAs, I got to agree with you. Those are kind of hidden gems. There is a lot of like-minded people that you can not only learn from, but the networking that goes on in those can really be tremendous, especially for wholesaling. And I'll share a little bit more about that here as we go. So kind of 101, wholesaling is where you're tying up a property, almost always distressed in one way, financially, physically, or both, and really assigning that to someone who wants to maybe take it for what we call the long dollar. So wholesaling wholesalers are usually in it to just assign it, make a little bit of a fee, and then you have an investor or someone that wants to do the full rehab or renovation, and ultimately they'll take it out and go through the process of getting it back to marketability and ultimately the sale on the long dollar. So wholesalers as a whole are usually kind of in and out, and certainly there are exceptions where they can make a lot of money, but most of the time you're in and out. You make a fee $2,000 to $5,000, $2,000 to $10,000, somewhere in there. Again, exceptions there, and certainly wholesalers will tell you they they can make a lot more, and that's certainly true. But most of the time, it's short dollar for in and out, and you let kind of another investor take the long dollar that wants to do the renovation. Subject to is it's a strategy that we kind of call unicorn behind the scenes because it has some moving parts. Most people don't really quite understand it, and when you do understand it, logically, it doesn't always really make sense. Why would a seller do that, right? So subject to, what it means is that you, as an investor, or are buying the home, you are taking legal title to the property, but you are leaving the underlying mortgage that the borrower, or the person that's selling you the home in this case, initially got from the bank. That loan remains on the home, and that borrower still remains personally responsible for the loan, yet they're giving you the legal title to the property. So the word subject to, or the phrase, comes from you're buying the home subject to the underlying mortgage remaining on the property. And so again, the question I always get is, why would a seller do this? And it's a great question. Of course, motivation, which is the driver behind many things that don't make sense, especially in real estate, can cause people to do things that may or may not make sense to you, but at the time it might be the best decision for them. So subject tos are a great way to build a portfolio without having to use your cash or credit. There are certainly some things that would dictate what a subject to what would trigger a subject to. Why would a seller look to do something like this? And obviously, you have to know what to say and how to approach it. But it can be a great way to acquire homes, and certainly a strategy that we've had a lot of experience with and a lot of success with, but does have some moving parts.
So I guess I am a little bit confused then. I mean, let's go back to that point you bring up. It's a great point. Why would a seller do that? I mean, I understand there is an underlying motivation there, but tell me a little bit about what actually does motivate a seller to even consider doing something like this.
Sure. So usually they have to be distressed. And what I have found in sub twos is most of the time it's financially. Now, it certainly can be physical as well. And that just means the condition of the property. So physically distressed means that the home would need work, repairs of some sort. And obviously that can range from, a coat of paint to obviously a full scale renovation. Financially distressed, which is really the driver for subject twos in my experience, it means the seller's behind a payment, 2 payments, 3 payments, and the outlook for them is pretty bleak. Foreclosure is likely imminent, and them being able to catch up the mortgage on their own is probably going to be unlikely. So now they've probably resorted to the fact that they're not going to be able to stay in the home. In some cases, they have equity. So in a subject to, you'll give them a check, at which point they kind of take their equity now and run with it, and understanding the risk that's still in place. So they're going to get some of the money today as opposed to nothing and losing the home. So the value add as an investor showing up is that, look, you have $80,000 in equity that you're going to lose out on because you're getting ready to lose the property. If we could get you some of that today, would that maybe be something you'd consider under the right circumstances? So in a case like that, there are times when we'll pay the seller basically to go, if you will. They'll get some of the equity today. Another scenario with subject twos is if somebody's getting ready to lose the home to foreclosure, can do a number on your credit. And so obviously when you're behind multiple payments and you have a full-blown foreclosure where the bank is taking the property back, you are not able to buy without some exceptional type loans another home for, in some cases, 3 years or more, and that really stays on your credit for several years. And even if you weren't interested in buying a home again, it knocks your credit down so much that in all facets of your life, your credit's really going to be affected. So we've had deals where just by virtue of saving the house from going into a full-blown foreclosure was incentive enough for the seller to just walk away from the deal. And many times, Matthew, the seller's at a point mentally where they've checked out, they've resorted to the fact they're not going to live there anymore, and in many cases, when life is throwing you some pretty heavy curveballs, you're not caring as much as your credit. You're not really interested in maybe what the next step for home buying is or how your credit overall looks. And so, again, I boil that down to motivation, but we've dealt with those situations where the sellers are really just checked out and ready to go. And so when we're able to at least value add to them that we can save their credit, ultimately catch the loan up, we'll make it current, ultimately take care of the property and get it cashed out of their name at some point down the road. We try not to commit to a window of time, but in cases like that, there are benefits to the seller, which is obviously the reason they move forward. So whether it's just getting the foreclosure stopped and saving their credit from really some long-term pain, and or giving them some of their equity today, of which they may not get any if the house goes into foreclosure, those are really the two primary opportunities or examples that we run into when it comes to subject twos. And let me just add one more tidbit, and I will let you kind of direct where you want this to go. But with obviously the forbearances and a lot of that, the chatter around the moratorium and all of the things that have gone on with how the government has helped prop up some of the rentals as well as the foreclosures, we think, and statistics certainly support this, that there's going to be a lot of folks that are behind a few payments. We think pre-foreclosures, NODs, notice of default, that type of scenario, we think is going to be relatively prevalent here in the coming months, and going to be some good opportunities for subject to type deals.
Okay, so you've sparked a lot of questions here. So, I want to get back to what's most important to our listeners here, because our listeners are obviously tuned into the channel for opportunity reasons. I want to stay as focused on that during this video as we can. But I guess I can't help but be hung up a little bit on the liability aspect here for the seller, right? So as somebody that comes in and tries to poke holes in things, I tend to be sort of a natural scrutinizer. I'm wondering, what exactly are the risks here? I mean, if you're asking somebody that has a home whereby they still have a mortgage, and yes, they're at risk of long-term default, which eventually leads to foreclosure if you're not able to short sale the property. And of course, at this point, refinances are almost impossible every time because you're already missing payments. This seems like a last ditch solution in a way, pre-short sale, which again is even, before you go to the foreclosure stage. So I get it. I get that there is sort of an imminent threat here, but how is this not a major risk to a seller who's signing a deed over, but is still willingly liable for a 30-year note that they no longer control the property on? And furthermore, how is a mortgage company, how is a lender agreeable to this in the first place, whereby, if you have a dishonest subject to broker or whatever that they're referring themselves to as, I'm curious, how does this not fall apart in some cases where you just hear about, fraud after fraud after fraud? What's to say that somebody can't just take off with your home, so to speak? Sure.
No, it's a great question. And again, my mind gets hung up on that as well. Let me give you the two measures of protection or security that we offer our sellers. That this is absolutely a good nugget for your subscribers and watchers here. Number one, when we are doing a subject to, what we give as far as instruments or measures of protection for the seller are really two things. First, we give them what's called a wrap mortgage, a wraparound mortgage. So if you have a mortgage on a property, that gives you the ability to foreclose on it. So we take legal title. We give, and there's going to be a first mortgage on the property already because there's a lender involved, and that's why it's a subject to. We're buying it subject to that loan remaining in place. But we can, now that we have legal title, we can give the seller effectively a second mortgage, and it's called a wrap because it just wraps around the first mortgage. There's no payments, there's no interest rate, there's not an accruing type of balance owed to the seller. It's just an instrument that they have. Should I fall off the face of the earth, God forbid, now they have a measure to foreclose. So now that's a little hairy because they'd have to foreclose the first mortgage, but it does give them a measure of protection. The second one, Matthew, that is my favorite and is I have found to be kind of the comfort level for our sellers when we do these deals is I tell them, look, at the closing, you're going to sign over the deed to my entity. I'm going to have the closing agent or my attorney prepare a deed from my entity right back to you. That's going to be held in escrow with very simple instructions that say, if I miss 3 consecutive payments, let's say, God forbid, I get hit and killed by the proverbial bus, you don't have to foreclose me. You don't have to track me down. You simply go to the closing agent or the title company or the attorney, verify that 3 payments in a row have been missed, and you can simply record the deed and take legal title back. Now, that's never happened because we don't enter into these to obviously not perform, and we don't spend money and go through the whole process to not stand behind what we've committed to. So that has never been used, but it's a feel good for them. And so not only do they have a mortgage, which again, there's some moving parts to that, but it does give them something. If they didn't have a mortgage, a wraparound mortgage or the deed in escrow, they have no recourse. So you get a fly-by-night person or someone's trying to take advantage of the situation, and they're none the wiser. The seller that's losing the property, they have no recourse. And so I've always found it important to let them know these are your measures of protection. You have a mortgage, and again, I'm going to give you a deed right back to you. Now, you can't go record it. It's going to be held in escrow, but if I fall off the face of the earth, you don't have to find me. You simply go back to the title agency. We have an escrow agreement that says those specific instructions very clearly. So those are the protection measures for the seller or the person that is in the home that's getting ready to lose it. As far as the lender's concerned, lenders aren't real crazy about subject twos. Obviously, that's their collateral. In fact, I think it was 1979 when banks kind of universally instituted what's called the due on sale clause. And due on sale clause simply means that if you sell the property or transfer legal title, that the collateral, which is the property, has to be satisfied before it can be transferred. Otherwise, the loan can be called due on the sale of the property. And that's really what it means very clearly. So what I found and what seems to be the pattern, as long as payments are getting made, as long as the loan's current, as long as there's not issues with the property from a physical standpoint, you're not getting a bunch of citations and city code enforcement violations, things of that nature, the lender has no issue. They're not in the business of real estate. They just want to make sure the payments are made. And certainly Bank of America, Wells Fargo, they don't have people on staff checking titles of all of their millions of borrowers. So if they did find out, and of course we do send them a letter that says we are now taking over, but it goes in some file somewhere and likely doesn't get seen by anybody that would want to call the due on sale clause. So as long as payments are current, as long as you are maintaining the property, there's usually not an issue. The only caveat, and I've got to say this, is that if you're dealing with a small town, local credit union type lender, where everybody knows everybody, that might be a little different. I heard a story. I can't prove it, but there was a gentleman in a small town out west that had done 10 or 11 subject to transactions. The city had fallen on some hard times, and ultimately all of those loans were with like a local bank, and local bank found out and ultimately called those loans because of the fact that the collateral that they had transferred. And so, but aside from that one example, in most cases, there's not going to be an issue with the lender as long as you maintain payments, maintain the property, and uphold kind of the agreement that the original borrower had. There's usually not issues with the lender, but they don't like it, to be very clear.
So I think it probably goes without saying, this is one of those business models that you want to make sure you do your homework, check your local rules. Guys, just be very careful when you're getting into certain businesses that you're not stepping into something that ends up turning your life into a mess. And that goes with absolutely any business that you want to get into. Speaking of businesses, let's take this into the opportunity side of this conversation, which is what we're all here for, because I see huge opportunity coming up. I know you do too. Before we dive into that, make sure you guys write down the email address, pink@vipfinancialeducation.com, which will be in the description below as well. Shoot an email if by the end of this video, you are looking for a way that will help you break out of a 9-to-5, will give you the opportunity to add to your salary or wages from a 9-to-5 and have a side hustle. We have made countless videos surrounding what I have determined is one of the single most creative and effective business models that is related to the wholesaling side of real estate. And it's a very concentrated, niche, specialized model that allows your clients or your partners, or whatever you're calling these affiliates at this point, Scott, to make $10,000, $15,000, $20,000, and in some cases even as much as $30,000, as we just saw in a video that we posted last week, per deal in profit. And that's with no money out of pocket. That's with no credit necessary. So for those of you guys that are looking for a way to sort of bypass the restrictions that come with trying to acquire your own portfolio, which is the long game of wealth creation. That is a long-term net worth investment solution versus a short-term net cash flow solution. If you're looking for that net cash flow solution where you're looking for windfalls of capital, 15K a month, 15K every 60 days, 30,000 in a month, just go into the playlist in the description below and start checking out all the videos from the various interviews that we've done on that business model, because it is phenomenal what people are accomplishing month after month after month, whereby they're realizing those types of income levels on the side. So very exciting stuff. And what's really cool about it is, while it isn't an inexpensive business to purchase, I think your sticker price on those at this point on the low side is $40,000. On the higher business model is $65,000. Those are two separate membership options that are available. This is much less expensive than a typical business in a box would cost. And it's also what appears to be a fraction of what a lot of these big seminar circuit companies, not to throw out any names, will charge you. They're right at that same price point. And yet when you get in, all they're really going to leave you with initially is start wholesaling. And I think this is just a much better way to go about doing it. So let's talk opportunity. Okay. Opportunity in this is, we see that forbearances are going to now be expiring. Forbearances, for those of you that aren't familiar, or you got into one without necessarily knowing what it was, is where the lender is essentially agreeable to delaying your payments. And your payments have been on hold for usually starting for 3 months, where then they automatically extended to 6. And then many lenders were then extending that 6 to 12. And if you were, because of the pandemic, looking at a cash flow shortage and were concerned about being able to make your payments, you quite possibly went on to a phone call. I did a video demonstrating just how easy that was last year, where I just simply called my lender, and within a matter of seconds after being taken off of hold, I had the ability to go into a forbearance situation. Those payments are then tacked on to the expiration of that forbearance period. So at the end of 12 months, you would then owe a lump sum amount of 12 mortgage payments, which means that if you had a, call it $2,000 per month principal, interest, taxes, and insurance payment, they would delay those payments, including the taxes and insurance, for that 12-month period. And you would now owe a total of $24,000 plus the 13th month that's now due, or $26K in total, all at once. Well, I'm here to tell you, folks, if you had a hard time coming up with $2,000 a month, I'm not quite sure where the heck you're going to come up with $26,000 out of thin air. So we are anticipating a potential tidal wave of borrowers that are running into this distressed situation. Is that true, Scott?
Very much so. Very much so. And I would only add that a lot of the landlords that were required to still make their payments, but where the tenants weren't as much, I think there's going to be a lot of tired landlords that are going to be experiencing a lot of that same pain.
That's a great point. Yeah, I completely agree. In fact, I speak with them on a regular basis. A lot of people are looking at exiting the long-term real estate landlording game at this point, because it's just too brutal. There really has not been enough of a helping hand put out to those mom and pop, small time investors, myself included. I received absolutely no assistance whatsoever. I did work with tenants when necessary. I was fortunate enough to be able to have tenants that were agreeable to paying what they could, and along with a few discounts that I voluntarily, offered, we were able to get through it so far. But I have many friends that are landlords that are just tired of being landlords. It just seems like all of the help has been given to, the tenant side of things through this terrible pandemic. So talking opportunity, right? We've got this amazing program that you guys provide. Again, if you guys are interested in taking a look at starting a new business and really putting in some amazing income potential for your family, then you can email pink@vipfinancialeducation.com. Make sure you put your first name, last name, and phone number in the body of the email. Very important that you do that. You guys have a limited number of regions. It's all regionally separated, right? Which means that it's not some gimmick where you say, we have limited availability. No, you in fact have limited availability, because there are limited geographical areas inside the United States where you're able to offer a market to somebody. So I don't want to get too deep into the business model. Again, I'm going to put a whole list of the playlist down below, that a link rather to the playlist in the description, so you guys can go down there and take a look for yourselves and just go through the interviews. If you're looking to break free and start your own business, that's where you're going to want to start, is this amazing model. But with that said, talk to me a little bit about what the subject to and wholesaling businesses are going to realize here in the coming months. Potentially, how is that going to change wholesaling and subject twos? Who would want to get into looking into subject twos more deeply? Who's the perfect candidate for that? Tell me a little bit about where somebody can start and why this might be the perfect timing to get involved.
Sure. So, Matthew, just want to make a quick point here about the value opportunity and as far as our company is concerned. When you become part of our company, part of our team, part of our extended family, we have a licensing agreement with you where you become part of our under our umbrella, and we stand behind that. And you had mentioned some of the bigger seminar companies that come into town, and there's some great ones out there, to be very fair, but very few of them stand behind you, and you're linking arms with them. And so, just as a quick point, something that we're proud of is the fact that we link arms with our folks. We're in the trenches with them, and they become a representation of our company. And so obviously we guard that very closely. So for whatever that's worth, I just wanted to share that. But in regards to wholesaling and sub twos, it's, by the way, that's subject to. Sub two is kind of an internal phrase we use, just a little short. We think there's going to be obviously tremendous opportunities forthcoming. Post-pandemic, obviously there's been a lot of chatter about the tsunami of foreclosures and things of that nature. Will that happen? Obviously, time's going to tell that, and the statistics are there. There are certainly a lot of things to support that, but at the end of the day, nobody wants to experience a 2008 again, and so we'll see how brutal it ultimately becomes. But unquestionably, there's going to be opportunities, and by the way, whether it's a good market, a bad market, the credit is easy, credit is hard. It's a seller's market, buyer's market, doesn't matter. There's always a segment of population that has experienced life, sickness, divorce, death, loss of job, whatever the reasons behind it were. There's going to be people that are losing their homes to foreclosure, and ultimately that's always a game and an arena that we want to play in, and that is always available. There's a little nugget I want to share that is regards to the RIAs, the real estate investor groups that you had mentioned earlier. Wholesalers, the real successful ones, really spend a lot of money every month, and we're talking thousands, in some cases tens of thousands of dollars to generate their leads, and that is kind of their leg up on competition, and ultimately that's what generates a lot of their activity. But many of the deals that they look at don't have enough meat on the bone or enough equity or enough spread for them to do what they need to do. And we have found that many of the big wholesalers discard or throw away 90 to 95% of the leads that they're generating. Well, just because it didn't work for them, they've got a big operation, a lot of overhead, they're spending thousands, if not tens of thousands of dollars a month. They need to have certain spreads in their deals to make sense. We have found that generating or getting a relationship with some of these people and being a conduit for their throwaway leads, that there's still some opportunity there, maybe not a good enough one for the big boys, but for individuals there may be. That's just something that we preach to our people. We encourage them and really ask them to get involved in their RIAs, and one of the challenges we just issued here in the past 6 months is to initiate or establish a couple of wholesale relationships, because you're really piggybacking. Now, you are going to pay them if you close the deal, but it's more on the if come as opposed to having to pay for the leads right out of the gate. So as far as wholesaling, that's just a little takeaway. And as far as subject twos, let me just make one other point here, because you said something after I shared some of my thoughts that was just kind of like a warning, right? You don't want to do anything. You're talking about somebody's home and taking legal title, and I mean that's a big deal, and that's somebody's livelihood, and so we're always very careful about that. But what I will tell you is this, and again, this is we can't go really in the trenches because there'd be a lot of explanation and time involved, but you can accomplish a lot of the same end results of a subject to without having to take legal title. And so you'd have to use a different mechanism. Maybe you would do like a lease and an option or some variation. But a subject to it takes a little know-how, a little savvy, and obviously the right things to say to make a seller comfortable. And ultimately, if you're going to be spending money, you want to control the legal title. And that's from an investor standpoint. Why would you want to buy subject to? I mean, obviously, if you can get a house and you get the legal title without really having to pay for it, that would be an obvious answer. But in most subject twos, you have expenses. You're closing the property. So you've got closing costs. You've got costs to transfer the title or the deed. You've got other costs typically to not only bring the payments current, but if the home needs some TLC. So what I was taught early on is that if you're laying cash out of your pocket on somebody else's property, you better make sure that you have your own protection, because now you're the one that's coming out of pocket with cash. And so why subject to? Because you as an investor have money out of pocket and you want to then control the legal title. But again, I learned a long time ago, you don't have to take the legal title to still do the same type of deal and ultimately have a situation where the seller wins and where you ultimately can get a victory yourself. Did that make sense what I said? Because I don't know if I went quickly there. I kind of feel like I might have.
Yeah, you went quickly. It makes partial sense. I think there's a ton of great wholesale 101 content that's out there that people can go out and find. And I just wanted to hear it directly from your mouth, because I know that you are considered one of the foremost leading specialists on this subject. You're as good as anybody about it anyway. So knowing what you know, I'm just curious what the type of person, who's a good candidate for this type of business model, because it sounds to me in all of the, complication within everything you're describing here, it is a little intimidating, right? I mean, if I were to picture going out and trying to get my, my first deal today, first of all, I still don't necessarily know exactly where I would begin. I think I would start by trying to, of course, fill in some of the blanks as far as information. But it sounds like you probably have to have pretty strong social and communication skills for this. It sounds like there's some, considerable negotiations that are going on between me and the homeowner. Obviously, I need to know my stuff well enough to be able to go in there. I think this is another big reason for people to consider a business model like the Pink Houses model, because you guys have all of the scripts, you work through all the trainings, you're rehearsing and practicing with folks. But I'm assuming that you can't come at this if you consider yourself to be a poor communicator. Is that a fair assumption for me to make?
So, Matthew, there's some merit to what you're saying. And in fact, we've looked at doing personality tests, and actually there's another company that we've studied that uses the DISC quadrant, the 4 different personality traits. And so I don't want to discount what you're saying, because I think there's merit to it. If you are somebody who is maybe in a space where you don't like the phone, don't necessarily like the social interaction, maybe don't like dealing with people, whatever, I don't want to stereotype an industry, but certainly that makes a pretty difficult jump when you're getting into the business of sales. And so I don't want to discount that, and I certainly don't want to make bones about that any differently. All I would say is that there have been some people that we've been very surprised with, and I'd like to think part of it's because of our support. At the end of the day, it's because the people that were quiet decided they want to show up and put the work in, and with our support and our guidance, we're able to do really well. So we've learned not to prejudge people. People that can not say 2 words at the training can go out and become assassins out in the field, and we've seen that a few times. But I would say that real estate's a great business. It can obviously generate wealth and generational wealth, and best path to creating that, in my opinion, that exists. But so there's an appeal to it, obviously. But if you're someone that is just not necessarily comfortable getting out of your shell, I got to tell you, last thing we want to do is have somebody spend a bunch of money with us and not ultimately, become successful, whatever that is deemed to be by them. So having said all that,
even though this is very clearly a sales position, you don't necessarily believe that somebody has to have sales experience.
They definitely don't need sales experience. It doesn't hurt. Obviously, it can only help. But again, with the fact that we're taking you by the hand and we're pushing you, we're holding you accountable, we're getting you out of your comfort zone. In fact, in our trainings, we have fun. We call it the hot seat, because we like to make people get up in front of the group and practice their scripts and squirm a little bit, and it's actually very effective. But so we do work with those folks in particular that don't have your sales experience. But you got to be able to deal with people and get out there, and if that's an issue, then I don't know if it would be the best fit for what we have to offer.
Well, and I think it's a good point just to emphasize the fact that if you're unwilling to lean into your discomfort, entrepreneurship in general is probably not going to be a match. I don't know of any business where I haven't had to do that. And when it came to sales, especially, these types of role-playing script rehearsals, it's absolutely necessary. Without it, I don't think you could realistically expect to perform well. I mean, I've done everything from digitally record myself to standing in front of the mirror to practicing with my mom and family to rehearsing with Kellyanne. And it's really, really important to take a blueprint that is already proven successful and practice it. So that's the fastest shortcut I can ever encourage people to invest their time into. I personally, I don't know why you would ever try and invent your own wheel. and not work on scripting and not practice. They say even the best comics spend the most time rehearsing how to respond to hecklers. It's just a matter of being prepared when that opportunity comes up. And that's why the people that work with you are making big money, because you're worth it. Your guys are worth it. They put in the time and they get paid for it. So if you guys are looking for a great way to get paid and start a side hustle, email the pink@vipfinancialeducation.com email address, put your first name, last name, and phone number in there. Either Scott or his partner, Michael, who is a co-host at this point on the channel, will reach out and they can see whether or not you are determined to be a good fit. I think what he said there that stood out to me the most is it does them no good to partner with the wrong people. This is not a let's try to sell everybody we can type of an environment. And for those of you who have been following me for any amount of time, hopefully by now you know that I do my homework and vet anyone that comes on this channel that I'm willing to bring back over and over. And if anything at any time is not as it's being described, if it is an overselling, under-delivering situation, then they're not brought back, much less offered an opportunity to host when I'm unavailable here. So hopefully you guys are feeling more and more confident about both Michael and Scott's role here alongside VIP. And we believe very highly in what they do. And behind the scenes where I get feedback about them, it is all positive. There have only been 2 situations where people felt like they maybe weren't a good fit after the fact. And it's because they just weren't willing to put in the time. That, Michael, I think at one point recently referred to it as a 10,000 pound phone, or maybe it wasn't Michael. Somebody recently used that terminology. And I thought that was really clever. I think that's true. If the phone just feels impossible to pick up, then you shouldn't be signing up for this or anything that requires the phone to make money. So very good advice for anybody is to know yourself before you go out and spend money. Beside that, where would you encourage somebody start if they are interested in looking into wholesaling in general, if they want to try and position themselves for a window of opportunity and beyond? Where would you say somebody's best starting point is? Is that here on YouTube where they just continue to explore more content?
So you know what, the answer is yes, with the caveat. With YouTube, which is obviously tremendous and on so many levels, there is just so much information. I've seen people get kind of the overload and almost the analysis of paralysis. One of the challenges in real estate investing, Matthew, is that there are many ways that you can ultimately invest. There are many different strategies, many very viable strategies, and so when you get online and you really don't know what you like, what's maybe your fit, maybe you don't even know what your big picture goal is, you can get really buried in the information. And so absolutely is the perfect starting point, just understanding that if you're not careful, you can get information overload. In fact, I had chatted with somebody recently that had spent several weeks going through YouTube videos and came back and said, I'm more confused now than I was when I first started. And it's because of that information. So, but I got to tell you, I think the very first thing you said on this video, which was really promoting and recommending the real estate investor associations. Every city has them. Some have more than one. Some are big, some are small, some are very active. Most bring in content speakers. Their job is to provide value to their members, and it's usually in the hundreds, not thousands, on a yearly annual membership. And so I think that's a great starting point, just to start to get to see what's going on in your market, what other folks are doing. Networking obviously is always paramount, no matter what, and so you'll get to meet some people, and you may kind of find what makes sense to you, what you like, and maybe what your style is, just by kind of getting to know some folks that are doing things similar in your market. So I would say that those 2 places would be my best advice for just kind of getting a feel for maybe what makes sense for you.
I like it. And just be careful about who you guys pursue. I will tell you that I did invite another gentleman that is widely known on YouTube for his content surrounding wholesaling. And boy, oh boy, was I concerned after that introduction. Again, I hate putting people on blast publicly like so many people do here. Maybe I should do that at some point. I don't know, but I just don't like to really get caught up in the drama. I'm just here to tell you, you've got to do your homework when you're looking into people. Just make sure that you're Google searching that company. Make sure that you're Google searching that individual. Make sure that if you're looking somebody up on YouTube, you can go on Google right now. You can Google search my name. You can Google search VIP Financial Education, and you may find 3 or 4 disappointed people who have publicly posted something, and just check how we responded. When you're dealing with the type of numbers that we have for the last 20 years, you are not going to make everybody happy. It's impossible. But that's not so much what concerns me about somebody when I'm looking at working alongside them. What concerns me is how did they deal with it? And you'll see our responses. I'll go in and full-blown offer a refund. I will put my cell phone out there in public on multiple Yelp posts. So this is something that I just encourage you to do with everybody, is just make sure that you recognize who you're working with. Be very careful to do it the right way. That's why we love Pink. We've already addressed everything that we could ever find out about them from their pasts. And I just have the highest level of confidence and trust that they're going to do right by the people that they work with. And they always have with me, and they always have with our members and our audience here. So always very grateful to have you guys around. Thank you, Scott. Thanks for the basic information that we've covered here today. I think it's a good starting point. Of course, I don't know if I'm more confused or less than I was before we came in. You did give us some clarity for me on this, but I definitely, in order to get going, would not just be looking to fill in the blanks. I would also very much know for myself I would need the support. And I think that's the biggest takeaway here, is there's just so much to know in any business model you're wanting to get into, that just find peers and find solutions to support mechanisms that are effective, that have a track record, and Pink Houses is one of those. So pink@VIPfinancialeducation.com is the email address, first name, last name, and phone number. Before you email, watch the playlist in the description below so that you get all your basic frequently asked questions answered, and go ahead and reach out and see whether or not a region is still available in your area. I will tell you that if the cost of participation, either at that $40,000 level or $65,000 level, which, by the way, those prices have always continued to go up, and I imagine they still are going to at some point. So the earlier you get in, the less expensive it will be. However, if the cost is a problem for you, there are solutions. So just make sure you note that in the email when you send your email in, that you may be in need of solutions regarding the price tag, whether it be financing options, whether it be maybe a lower barrier of entry somewhere else where they can kind of get you off the ground without necessarily full participation at the moment, or a delayed participation type of solution. I don't know. All I know is they're willing to get everybody help that wants it and is serious enough about running their own business using their model. So, Guy, I think we're going to have to call it for today just to keep the video manageable. But, Scott, I really appreciate your time. Thank you so much, my man.
Matthew, it's my pleasure. Thank you.
All right, guys. Everybody have a good day, and don't forget, keep on cash flowing. Talk to you soon.
Some names and where you're from.
Bobby and Jenny Witten. We're from Knoxville, Tennessee.
What's your previous real estate experience?
So we've got some buy and hold properties. We currently have about 7 units, and we've been in real estate investing for about a year now.
Fantastic. After the last 4 days, what's the biggest takeaway?
The biggest takeaway from us is this is something you don't have to do alone. The staff here is incredible. They're supportive, they're knowledgeable, they're friendly, professional. We don't feel like we're doing this alone. We feel like we've got a team behind us, and that's going to make all the difference.